Is your portfolio at risk of a bubble burst? With the S&P 500 riding high, it's easy to be complacent, but some stocks may be headed for a downfall. Discover which stocks experts are warning about and why now might be the time to sell. Welcome back to our channel, where we dive into the latest market trends and investment insights. Today, we're tackling a crucial topic: stock market bubbles. As the S&P 500 continues its impressive rise, driven by booming AI and tech sectors, some stocks have surged to potentially unsustainable levels. We'll explore the 11 stocks experts believe are at risk and discuss why this might be the perfect time to reconsider your investments. In this video, we'll break down why these 11 specific stocks are considered to be in a bubble, looking at their recent performance, short interest, and quality scores. We'll also cover the implications of economic factors like AI spending and private credit risks, and why these elements could trigger a market correction for these stocks. Stay tuned to learn how you can protect your investments in these uncertain times. In recent times, Wall Street has been abuzz with speculation over whether the stock market is currently experiencing a bubble. This is a challenging question to answer definitively, as different sectors respond differently to various economic factors. However, it's quite evident that a select few stocks could be in a precarious position due to their dramatic rise in value. The S&P 500 itself has risen nearly 15% this year, prolonging a three-year bull market, largely fueled by consistent economic growth, decreasing inflation, and a significant boom in artificial intelligence, AI. This surge in AI has necessitated increased spending on data centers, integral to AI operations. If this expenditure falters, stocks related to data center infrastructure could see significant declines due to their current high valuations. Banks and their potential entanglement with bad private credit loans present another layer of complexity and risk. While this risk remains low at the moment, any default by private credit funds could adversely impact major financial institutions. Predicting whether these risks will materialize is notoriously difficult. Therefore, instead of general market speculation, it's more insightful to hone in on individual stocks that appear to be riding a bubble. Trivariate Research's Adam Parker has identified such stocks, which have surged at least 100% over the past 6 months, and trade within the top 10% of enterprise value to forecast sales among a pool of 3,000 U.S. stocks. These stocks are exceedingly high-priced. Further traits of these high-risk stocks include significant short interest, with many stocks having short interest percentages exceeding the average found in the S&P 500 and NASDAQ. This indicates that traders are betting heavily against these stocks, expecting a downturn in the near future. Additionally, these stocks rank in the lower half of Trivariate's quality model. This low ranking can indicate volatility due to financial losses or a history of missing profit expectations. Moreover, each one of these companies has analyst earnings forecasts for 2026 that are lower than their initial projections for this year. Overall, these stocks appear set for a potential fall should they fail to meet the market's expectations, especially considering their poor fundamentals despite inflated stock prices. Now let's delve into some specific stocks that could be teetering on the edge of a bubble, particularly those riding high on the hopes for future technological innovations like AI and quantum computing. Our focus here includes 6 quantum computing stocks: Rigetti Computing, D-Wave Quantum, and Quantum Computing Inc. We also add MP Materials to our list, a rare earth metals miner, alongside software companies such as Applied Digital and SoundHound. The remaining 5 companies within this high-risk category span industries like uranium, chemical, and power sectors, all benefiting from the AI investment boom. These are Uranium Energy, NuScale Power, EOS Energy, Pure Cycle Technologies, and Bloom Energy. Some have surged due to company-specific developments. However, many are linked to broader growth trends subject to severe interruptions. While not all of these stocks may crash, they do represent a high risk for significant declines. To summarize, we've identified 11 stocks that are potentially in a bubble due to their extraordinary gains and underlying financial vulnerabilities. These include companies in quantum computing, rare earth mining, and AI-related sectors, all of which have enjoyed high valuations and significant short interest. While not all will necessarily collapse, the warning signs are clear. It's essential to stay informed and cautious about your investment decisions. Now we want to hear from you. Do you own any of these stocks, and are you considering selling them? How do you assess the risk of a bubble in your own portfolio? Share your thoughts in the comments below, and don't forget to subscribe for more insights on navigating the stock market.